In today's video, we're covering the new inflation-adjusted tax brackets for 2023. I'm going to tell you everything you need to know and how this affects you. So here's the problem with inflation and your taxes. During the pandemic, the Federal Reserve printed an excessive amount of money. We're talking trillions of dollars. What could go wrong, right? So that caused inflation, and it was not transitory. As a result, the price of almost everything has gone up. Goods, services, and your income, at least for most Americans. So don't misunderstand the situation or what I'm saying. Your income has gone up compared to 2020. However, your income, it has not been keeping up with the rate of inflation. So the economic data from the Federal Reserve, it shows that. So this is no secret. It's not a conspiracy theory either. The government acknowledges this. So wages not keeping up with inflation is a problem, but it caused another problem, which is what we're going to get into deeper today. Because you're making more income, because of inflation, you know what ends up happening? You end up paying more taxes. So that's because the more money that you make, the higher your effective tax rate is. So this is an unfair consequence of inflation. So prices of goods and services, they're going up fast. You get paid more and you think that you're keeping up with inflation, but as your income increases, so does your tax rate, which means that there's going to be less money for you. So each year, the IRS takes this into consideration and they adjust the tax brackets. They adjust it for inflation, and it's usually a small modification. However, because the rate of inflation in 2022 was at a very high level, they made an unusually large adjustments to the tax brackets for 2023. That's for this year. So please note that this will not affect your tax returns that you're going to be filing this current tax season, because this is an adjustment for 2023, which is what you're going to be filing next year. But let me show you the adjustments for this year. So I've lined up the tax brackets for 2022 and 2023 so you can see the change for yourself. These are the tax brackets for single people and married filing jointly. So take a look. So look at the red boxes. In 2022, the first $10,275 that you make is taxed at 10%. In 2023, they increased that amount to $11,000. So this is a good thing because that means that more of your money will be taxed at the lower rates. It's the same situation for married filing jointly, which is represented in blue. In 2022, the 10% tax bracket ended at $20,550. In 2023, it increased to $22,000. So now I've brought up the tax brackets for married filing separately and head of household. So it's the same thing that's going on here as well. So take a look at head of household. I've outlined the year-over-year change in blue. The 10% tax bracket stops at $14,650 in 2022. In 2023, it's increased to $15,700. So you can calculate and do the math for yourself. All tax brackets for all filing statuses have been adjusted upwards by 7%. So again, this is a good thing. It's the absolute least that they can do in this situation of high inflation. Now, I want you to understand this because this is very important, and a lot of people are getting tripped up by this. When you file your 2023 tax return next year in 2024, do not expect a bigger tax refund, not because of this. I'm going to tell you why. It's because your payroll system at your workplace, it's already taken these new tax brackets into consideration. It takes it into consideration when it's computing how much taxes should be taken out of each and every one of your paychecks. So if you make the same amount of money this year compared to last year, yes, you will end up paying less in taxes. However, because your payroll system knows this, it's going to take out less taxes from each one of your paychecks. So ultimately what I'm saying is don't get your hopes up. That's all. You're not going to get a bigger tax refund because of this when you do your tax return next year. So instead, expect your paychecks to be a little bit bigger this year throughout the course of the year. So for a lot of people, the difference, it may be so small that you don't even notice it. But if your pay stayed the same, but your net take-home pay, it changed a little bit for the better this year, this is the reason why. So I hope that helps answer that question. Additionally, it's not just the tax brackets that changed. The standard deduction, it's also been revised upwards by approximately 7%. So that's a good thing because most people claim the standard deduction. And just so you know, you do not have to take any special steps to take advantage of all of this. All of this is going to apply automatically to you. I just want you to know what's going on. So I gave you the situation, I gave you the facts. Now I want to share with you my opinion. So okay, they are right. The IRS is right in upping the tax brackets. However, in my opinion, they are still shortchanging us. So this is better, but it's still not good enough. So it's not fair. I'm going to tell you why. But let me just say this. For Social Security recipients, they received an annual cost of living adjustment for this year of 8.7%. And believe me, I do not believe that 8.7% for Social Security recipients is sufficient. I believe that they're being shortchanged too. So you have the Social Security COLA of 8.7%, and they increased the tax brackets by 7%. So I understand that there's a computation for COLA, but I just want to point that out there to give you some context about the 7% increase in the tax brackets. Okay, so the IRS increased the tax brackets by 7% because according to the U.S. Bureau of Labor Statistics, the annual rate of inflation in 2022 was approximately 7%. However, in reality, the true rate of inflation is much higher than 7%. 7%, that's the stat given to us by the government. That's a government-reported statistic based on how they calculate it. However, if we used the same metrics to calculate inflation the same way that it was calculated a few decades ago, then the rate of inflation would be above 10%. So the Bureau of Labor Statistics has changed the way that it calculates CPI inflation. In the past 30 years, they changed the calculation method 20 times. So you see, the government does not calculate inflation as the change in price of this item, so this year compared to last year. So if you wanted to be logical in calculating inflation, then you would compare the price of that item today compared to the price of that item last year. I mean, that would make sense, right? Instead, they compare a basket of goods from this year's prices to the previous year's prices, allowing for substitutes. So if the price of something gets too high, they're allowed to substitute that item, swap it out of their calculation for something cheaper. Of course, this is going to affect and manipulate the true rate of inflation. So obviously, the government wants to report lower inflation numbers. It's in their best interest to do so. Because if the government reports higher inflation figures, then they would be required to pay out more money to the public. So for example, the CPI inflation figures, they are used to determine how much of a pay increase that Social Security recipients are going to get. If the government report shows a higher rate of inflation, then the government needs to pay out more money to those recipients. If the government reports a higher rate of inflation, then they need to adjust the tax brackets even higher. That would be good for the American people, but it would be bad for government tax collections. So do you see what I'm saying? That's the reason why I'm saying that the tax brackets, they're increasing. They made the inflation adjustment increase. That's a good thing. But in my opinion, they're shortchanging us. It's good, but it's not good enough. So wages have not been keeping up with inflation, which is bad for everyday Americans. Now, tax bracket adjustments, they're not keeping up with inflation either, which is also bad for everyday Americans. So listen, you can call this complaining, you can call it whatever you want. I call it the truth. And I just wanted to bring this to your attention so that you are educated and aware of what is going on between the lines. So they're trying to be sneaky. I'm paying attention and I know what they're doing, and I thought that you should know too. So let me know what you think. Let me know what you feel, how you feel about this. Was this a fair inflation adjustment by the IRS? Please leave your comments down below. Thank you so much for all the support. Please subscribe, and I wish you a very nice day.